Hello everyone, welcome back to the channel. Welcome back to another weekly watch list video where we're going to go over everything you need to know for the week ahead in the stock market. Before we get into it, if you would be so kind, hit that thumbs up for the video, and if you're new, subscribe to the channel. So we're going to start where we always do. That's the earnings up there for the week. We still have a lot of retail earnings at the beginning of the week here, and then Nvidia on Wednesday. That is going to be a very much watched report because that stock has gone literally straight up the entire year, building in so much growth. Now, the stock has to catch up with itself, in my opinion. I think it's way overdone, but let's hear what they have to say. Nvidia is an excellent, outstanding, groundbreaking, future changing type of company. So while I still believe that you would love to be invested in Nvidia, do you chase it this high or do you wait? Maybe during earnings, it gets more volume, people take, some risk off the table with it, and then you could pick it up at a lower price. Now, obviously, if you missed it all year long when it was low, that's part of investing. That's part of trading. That's why a lot of people will stay in positions and they'll buy on good companies. They'll buy when those stocks go down, right? They just keep averaging their price down, build positions, and then you could eventually take some off the table as you go. And then there's also the trading aspect of Nvidia. It's definitely a very much day traded stock. All right, so that's your earnings right there. All right, going over to the economic calendar. This week, there's a lot of Fed speakers. There's the minutes on Wednesday. And then the most important thing that I'm going to be looking at is that PCE on Friday. That's the personal consumption expenditure. That's something that the Fed really, really looks at. That's where they're getting that 2% inflation level. That's coming from the core PCE. So if we take a look here, if you ever want to look at this stuff, it's bea.gov. You can check that, Google PCE, and this will come up. You could learn more about it. You could read the reports. You could see where we were coming from, where we are now, because so much of the market is being traded with this inflation, risks out there and the Fed. So it's good to know this stuff. So what is the personal consumption expenditures price index? That's a measure of the prices that people living in the United States or those buying on their behalf pay for goods and services. The PCE price index is known for capturing inflation or deflation across a wide range of consumer expenses and reflecting changes in consumers' behavior. All right. So that's why the Fed looks at this. It shows that behind the scenes what consumers are paying for goods and services. All right. So clicking here on current release. Now, this was released in April. This is March's release right here. So what we're going to get on Friday is the April release that is released in May. All right. So this is what we're seeing go on. PCE, the headline number from November, which is 2022, it has really, really ticked down. And then March's reading of 4.2 was just a huge difference in what we've been seeing. But the PCE, the core, which excludes food and energy, that has been much stickier. All right. That has not budged as much as that headline number. The core PCE, which is this right here, that's what the Fed is looking at. We're currently at 4.6. They want 2.0. So you can see this is not moving. The core has pretty much been exactly where it is. Now, it did come down a lot before, but we've seen in the last 5 months, it hasn't really moved. While that headline number, well, that has moved a lot. All right. So that's the PCE. That's your economic calendar right there. Those are the things that I would be looking at. The minutes from the FOMC meeting, that's on Wednesday, right? On Thursday, you have GDP and initial jobless claims before the market opens. That's something I would be looking at. And then Friday, like I said, the PCE. Okay. So let's go over to the sectors and their relative performance. Now, if we look at this year to date, communication services, technology, consumer cyclical. This is all those 7 stocks that I talk about all the time. It's your Metas, Googles, Amazons, Nvidias, Microsofts. That's all these stocks right here. And they're making up all the gains. So all the gains we're seeing. And this year to date looks much different than 2022, right? Energy was up a huge amount. Remember that big green bar for energy? Well, things have changed now. Now we're seeing all the money being put into those 7 stocks. Okay, so that's year to date. If we look at the weekly performance, no surprise, technology again leading the way. And those defensive names really not doing well. Okay, so that's your sectors there. Something I want to show you guys, which, you know, in this market and with technology and the NASDAQ, I mean, it's really remarkable the strength that we're seeing with the QQQ. Now that's the NASDAQ, right? When treasury yields go up, like we've seen this very steep raise for that 10-year yield, usually the NASDAQ will trade and diverge from that. These are trading in lockstep with each other, which is really kind of strange. I don't know how long that's going to last, but that's what we saw here. This is the past month, especially the past 5 days. We've seen, you know, a really remarkable yields go up. NASDAQ still goes up. Nothing is shaking the NASDAQ market because of those 7 stocks. If we look at the dollar index, another thing, when this goes up like this, really steep, big, you know, raise, usually that's not great for the overall market. As this dollar index goes up, it cuts into profits for those companies doing business overseas and everything else. Usually you would see the market, you know, trading and diverging from this, trading inversely from each other. It's trading in lockstep with the dollar. The dollar is going up. The market is still going up. All right. Usually that is not the case, but the market has been very, very strong. And that's what we're seeing so far this year. So that's your dollar index, your economic calendar, the sectors there, and the PCE this week. All things that you should know going in. Okay, so going over to our compass, the SPY, the S&P 500 ETF. This is a great thing to follow as far as the markets go. It has all of the top stocks in this ETF. So where are we at? I have the volume profile over here so that we can take a look and see where all that volume has taken place. Now, this is for the past year of trading. You can see right here, all this consolidation, a lot of volume that we just broke out of. You can see the point of control right here at 410. This is a very nice looking setup here to go higher. Now, there a lot of times when they break out, you will pull back and retest this sort of area that we broke out of. Right around here, this 415 area. Watch this closely. If this ends up coming back down and then bounces, that'll be pretty good sign for the bulls. If it breaks down, you have the point of control just under it, and then the 50 moving average. So The S&P 500 definitely is looking very strong. High volume. The RSI is not really overbought yet. It's looking pretty good as far as the SPY goes. If we do look at this on the 3-year, you can see that there's a lot more volume that took place because of 2020, 2021. A lot of the trading was in this area. In 2022, it started to fall apart, due to the Fed raising rates. And now the market's trying to test to see if we could get back to these levels that we were at. Now, it is true that, 7 stocks are definitely causing most of the move higher in the markets. But, we just have to look at the charts, trade the trend, right? Don't let your bias get in the way. And that's something that I struggled with a lot, is letting that bias get in the way. Well, why? I would say to myself, NVIDIA, that's ridiculous. Why would NVIDIA be up that much? The valuations are crazy on it. All right. This is an AI push, and it's still continued to go higher. So, if you're in that bias mind state, you can really get wrecked going against something just because it's overbought. RSI, very overbought, but just be careful with your bias getting in the way. All right. So let's get back to the markets. As far as the QQQ goes, a nice breakout. Again, this consolidation that we see here for the breakout. It consolidates, which is very healthy for a market. This market was in an uptrend all year long, and consolidated, broke out. So now it is extended. I would wait for this area to be tested again, which it hasn't really been tested outside of a couple of days here. It was tested. I want a real hard test. So I want to see some really big red days and see if those buyers are still there. That's what I would be looking at here. It is just way too extended at the moment to be chasing this. Looks like a short squeeze here. So if you have too many people on one side, right? Too many bears on one side thinking this market should not be here. We shouldn't be trading here right now. And they just keep shorting and shorting. And the bulls they realize that, just squeezing the bears out. It's really as simple as that. Once again, 7 stocks. 7 stocks look like this right now. This really nice, aggressive, overbought move to the upside. I want to see the rest of the market do well before I get excited and bullish. I'm just not there yet, but you do have to just trade the charts. This right here, the consolidation that we saw, this was a very good breakout. So when we broke out, it held up. That's really a good sign for the bulls. And it was. That's a big move. But, things don't just keep going straight up. They have to pull back a little bit. So I would definitely be curious to see if that happens. There's, some things that are happening this week, maybe with the PCE on Friday, and we have NVIDIA earnings on Wednesday. Certain things can influence the market a little bit. All right, so that's the QQQ. Going over to the Dow, we're just pretty much just range bound here on the Dow. There's not much to get excited about here. So I'm not going to get excited about this. I'm not even going to focus too much attention on these Dow 30s stocks. This is not something a lot of people trade. I personally think looking at the SPY is much more helpful in determining the market than the Dow is. So the IWM next, this is the Russell 2K, all the small cap stocks. And you can see once we get into a range with the IWM, Usually it will go back and forth. There'll be really critical support levels. There'll be critical resistance. And that's what we saw on Friday, a gap up, and then it just pulled on back. And you can see here, the IWM is now breaking and holding out over that 50 moving average, which is a good sign. Finally, getting over that level since the banking crisis, or whatever you would call that, happened back here in March. And now we're finally climbing back out. Nice resistance here at 178. So watch that 179 area. All right, so it's the IWM. Taking a look at a couple of stocks. Apple is back to this right here. So we saw nice push up into this level, and then it kind of acted as that supply, right? Supply zone sold off dramatically from here. Well, we're right back there, and on Friday gapped up to that exact spot and pulled on back, all right, to close basically where it closed the day before that. So that's Apple here, the consolidation breakout into that previous resistance, and now we're seeing sort of a pullback. And Apple, it's still very strong. I mean, look at this chart. That's just a very strong move. Apple tends to do things like this. It'll have a very nice run, and then it'll come back down. We've seen that happen before. And like I said, I don't want to short something just because I feel like it's overpriced, overbought at the moment. There are ways to do that. If I do see an RSI that just makes no sense, you can take puts, but you got to realize that it's just for a couple of days, because a lot of times you'll get that move down, right? So you'll have a nice trade, but you don't get that continuation because you're in that uptrend. So you get a pullback, right? So your trade will be good. You're going to want to take profit, and then it'll bounce back. All right. So that's kind of the way that, I would be looking at the market right now if you're going to short anything, because it's very, very strong. AMD, strong. NVIDIA, strong. These all look like the QQQ. Google, ridiculously strong, but ridiculous RSI level. Look at this, 78. We haven't seen that all year long. I mean, let's see the last time. Let's go out 3 years. That is the highest that Google has ever had in the last 3 years on the RSI. And we can see here, I mean, up to 126, sold back down to the 123. That's not sustainable. You cannot just go straight up. So that's why a lot of people play for that reversal. So that's Google, Meta, looking really, really strong. Everything is looking strong. Netflix, strong. Tesla, back over the 50 moving average, but into this downtrend line. See how it handles this downtrend line here. This has the potential to break out, and we did call a nice reversal here, and it has happened pretty good. Did break out from this consolidation, close the gap. Everything that we were talking about in a video a couple of weeks ago has now happened. So that was a very good move, but you're into that sort of downtrend line resistance. So watch that. If we do break out of this, then maybe a move up to 190 to maybe even this 200 moving average is possible. All right, so I'm going to leave it there. Hit the thumbs up for the video. I'll see you guys on the next one. Take care.